Tuesday, October 29th, 2024, Monaco 64, home of alternative economics and contrarian views. Well, recently there was a symbolic collapse of the U.S. Treasury, but what we're going to look at today, though, is the literal collapse of U.S. Treasuries that I'm seeing. But before we do, just wanted you to watch the symbolic fall of the U.S. Treasury and the reaction of the U.S. Treasury Secretary.
Thank you, Colby Smith with the FT. You've described calls for widespread tariffs as deeply misguided, and the IMF today has warned that such policies will dent global growth. Can you elaborate more on the near-term economic impact of these policies and over a longer time horizon? How concerned are you about the potential impact of the dollar's status as the world's reserve currency?
Let's see.
Thank you.
So at least she has a sense of humor, Janet Yellen. And it's interesting that the question is related to the long-term status of the dollar as a major reserve currency. And I said to you that treasuries, though, are literally falling. And you might be wondering, what do you mean? Well, versus gold. Gold is the ultimate measure of value and has been for thousands of years. It's maintained its purchasing power throughout times, and that's why it's money. And that's what we're going to look at today. I think it's really worrying because a lot of pension funds, every pension fund, I would say, not just in the United States, but throughout Western Europe and other parts of the world, they hold a lot of bonds, and treasuries are part of that. And I'm concerned that many of these fiduciary agents are not performing their fiduciary duties because they're sticking to this 60-40 portfolio. As you can see here, Morgan Stanley says that it's the return of the 60-40 portfolio, mainly because there was a big drop in the 60-40 portfolio in 2022, 17.5%. You can see that Schwab, the older you get, the more bonds they recommend that you have. And BlackRock as well has a 60-40 portfolio. And you don't see any allocation to precious metals, to gold and silver. And by that I mean physical. Yes, they could do it through the ETF, but ideally it should be physical. But they're not going to tell the people who put their money into these pension funds. And these pension funds can be public and they can be private. Everyone that has a pension that is run by the company or the state or city, municipality, their pensions are in trouble, and we're going to come to that in a minute. And another interesting fact here, and this is from King World News. It says here, as of October 24, 2024, global financial assets are about 311 trillion. Private gold holdings, 1.9 trillion, and global mining shares, 550 billion. Private gold holdings combined with mining shares as a percentage of global financial assets still only represents 0.8%. I mean, that's quite amazing. And the interesting thing is that it says here, when we do go, where do we go from here? We all know that this percentage reached 8% in January 1980, ending the year at 5%. So what I'm trying to say here, there's a lot of room on the upside for the gold bullion and the mining sector. And now, before I show you why U.S. treasuries are collapsing, literally collapsing, it's not just symbolic, I just want to give a shout out to Miles Franklin, my precious metals affiliate in the United States. And if you want to get in touch with them, you can email them info@milesfranklin.com and tell them that I sent you there, Mario or Monaco64, or you can call them on 1-800-822-8080. This week they've got half-ounce gold Canadian maple leaves. It's only 4% over spot. They might have other stuff that's less over spot, but this is half an ounce, so it's more affordable for a lot of people. $110 over melt. And they have 1 ounce silver Britannias, $2.99 over spot. And I think that's a very good deal. They're very nice coins. They're the coins that I try to buy here in the UK, even though I have some American Eagles too. So why are treasuries then literally collapsing? Well, I've been keeping track of this relationship between gold and treasuries. I've looked at it in terms of treasuries, like the gold to treasury ratio that's breaking out upwards, but I've done it in reverse. The 10-year note futures versus 1 troy ounce of gold. And this is not recent. This is a long-term chart to the beginning of the 21st century. And you can see there was kind of a correction from around 2011, 2012 to 2016. But it's been really a downward trend for treasury notes. 10-year treasury notes. And when we talk about treasuries, the very short-term treasuries are called bills, up to a year. After that, from the 2-year note to the 10-year maturity, it's a note, and anything above 10 years is a bond. But anyway, as you can see here, we are collapsing here. And why is this happening? Well, because ever since actually 2020, 2021, treasury yields bottomed at a historic low of like 0.3%. And I spoke many times in the last few years that I thought that was the end of the bull market in treasuries. And by bull market, I mean the price of treasuries were not going to go up anymore and yields are going to start going up. And the bull market in treasuries started in 1981 and ended, in my opinion, around 2020, 2021. So this is serious here because even after Jay Powell cut interest rates on the 18th, of September, treasury yields have gone up. We're now above 4.2%. And at the time, they were at 3.6%. And gold, of course, as I speak here this morning in London, gold is almost at an all-time high. It's at 27.55. So that's what's happening here. And even if treasuries recover in the medium term, who's not to say that gold will recover even faster? So this ratio is going to keep falling. And so in terms of real money, money that has been a store of value for thousands of years, not the fiat dollar that we've had since 1971, that is concerning. Your pension fund, wherever you might work, wherever you might have worked, or your savings, if you have a 60-40 portfolio, yes, they will be there, hopefully. There won't be like a default. It's not going to disappear. What's going to disappear is your purchasing power. And I think people are already feeling the pinch, even people who do have investments. And I'm going to refer to this book again, A Pocketbook of Gold by Jim Sinclair, a survival manual for monetary mayhem. And he says here that ultimately, when this paper game comes to an end, and I think we are near the end of this paper game, and I'm not saying it's going to end this week or next month, but we're, within a few years, ultimately gold will be what reveals value, right? So what I'm trying to say here, we have to start measuring things versus gold. Yeah, we have looked, of course, at the Dow gold ratio for many years, but now we need to start looking at treasury notes or treasury bonds, even the 30-year versus bond ratio, and that's not looking good. And that's why I said, yes, Miss Yellen, treasuries are collapsing. Maybe not in nominal terms, but in terms of gold, they are. And I wonder if Janet Yellen follows this chart. She certainly seems to like gold. She's got a nice gold necklace, as you saw there during that press conference. I would assume that's not gold plated. So she's got a few $1,000s around her neck. Anyway, Rudy and I are early today. So, and it's also like we're only 4 hours ahead for a while here in the UK of Eastern time. But it's 7 a.m., just gone past 7 a.m. London. So let's quickly go through the markets here. This is going to be a shorter video today. We've got spot gold, as I said earlier, around 27.56. We're up 13 bucks. The high's been 58. And if I'm not mistaken, last week, the all-time high was at 58. So, yeah, we're trying to break out here. We'll have to see later on if it does. Silver right now is at 33.95. It's gotten up to 34.12. It is up about 29 cents. It's outperforming gold, a little bit. The rest of the markets, the stock market indices are up slightly. The NASDAQ is up about 0.25%. The currencies are pretty steady, so not much to write home about. And I see that WTI crude is pretty much unchanged at 67.24. I think it rallied from yesterday when I was speaking. It had a 66 handle. What about the 10-year yield? Well, I think we got up to 432 yesterday, and I think 433 is a key level in the last few years. It's a key resistance level. And don't forget, when bond prices drop or crash, yields go up. And I'm going to put a link to this page where you can check Treasury yields. And yeah, but right now the 10-year yield is at 427. It's down just over 1 basis point. Before I wrap up, just wanted to thank all of you for your interest in the channel, all the new subscribers as well. I think we've gone over 114,000, so that's nice. It's ticking up. So if you enjoy my posts, but haven't yet, make sure you subscribe. Hit the little notification bell. I make videos every day except on Sunday that I do a live stream at 9 p.m. London time. So with that, I'm going to wish you all a very good day. Take care. Bye.